Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm Whitney Sewell, your host. Today, our guest is Alina Trigub. Thanks for being on the show, Alina.
Thank you for having me, Whitney.
Yeah, Alina is a former tax accountant with the Big Four experience. Alina's business model is twofold. She helps a select group of people build their wealth passively without distraction to their daily lives, and her investments concentrate on rebuilding communities and giving other folks great places to live. Well, thanks again, Alina, for being on the show. And why don't you give our listeners a little more background about how you got into this business and why?
Absolutely, and thanks for having me, Whitney. Good evening, everyone. My name is Alina Trigub. I have an undergrad in accounting with MBA in finance. As Whitney mentioned, I worked at the Big Four, which used to be Big Five at my time, but who counts the years? I'm a founder and managing partner of SAMO Financial. Our equity firm concentrates on helping others find ideal investments for them and build wealth for themselves, their families, and their generations to come. I also host several meetups. I host a meetup in New York, meetup in New Jersey, and virtual meetup for women. All three meetups have a similar name. It's called The Power of Passive Investing Through Real Estate. And it's all about networking in helping others get educated and start investing in real estate. In addition to that, I do host educational webinars in collaboration with various administrators of self-directed IRA companies. The topics normally revolve around aspects of getting started investing in syndications by using either solo 401k or any type of self-directed accounts. In addition to that, I own over 1,100 apartment doors, over 500 storage units, and I have ownership in a fund that is over $5 million by focus on mobile home parks.
Nice. That's a lot. I was trying to take some notes. You've done a lot. So why syndication? Why not, why didn't you start buying single family homes or, flipping homes or buying a duplex? Why are you in the syndication business?
Good question, Whitney. So my family and I, for a very long time, have been worried because all of our investments were in Wall Street for many years. And I've been searching for a way out of Wall Street for a very long time. Until about 5 years ago, I came across a website called Bigger Pockets and started going through website and uncovered the word syndication. It took a while for me, but I did additional research, additional digging, and I decided to take a leap and started investing. So my very first investment was an equity partner in someone else's syndication. And just like for most people, I started out with investing in multifamilies because obviously apartment buildings is something close to home. Just like a lot of folks, I used to live in an apartment building and I know what it's like. And I understand the business that has that bread and butter component of having a roof on over your head. So finding a syndication that invested in apartment building in a community where people would always want to live was kind of a perfect leap of faith for me to start investing in syndications. And to add to that, syndications allow you to scale a lot faster. It's really hard to do that when you're investing in a single family house or just buying a duplex or a couple of condos. With syndications, it's a lot different. If you're buying an apartment complex that has, for instance, 100 units and only one of them is empty, then your vacancy is only 1%. But by the same token, if you buy a single family home and it's empty, then your vacancy is 100%. So it's very, very easy to see the scalability component with apartments or syndications in general versus single family homes.
So you've mentioned many things I want to come back to, and I'll ask you more questions as we go. But I'd like to focus on that first deal and how you got in that first deal and what that looks like. A lot of people I think would be in those, in those shoes. They're trying to get that first deal done, and it's kind of the chicken or the egg type of thing. So how did you do it? Explain to us how that happened. How did you make that first deal happen?
Absolutely. So being a former accountant, I'm used to doing a lot of research, and the same happened with my very first deal, when I first identified a deal sponsor, which is also called syndicator, general partner, and again, it was through Bigger Pockets, and I started doing my research on that deal sponsor. I've been asking questions about him, other people. I spoke with that sponsor several times. I also checked his personal profile. I checked all of his social media profiles, and basically utilized World Wide Web as much as I can. I mean, Google is a beautiful thing. I'm grateful for Google. A lot of it can be done without leaving your laptop, by basically doing all of your research in front of the computer. And I also did check that sponsor references indirectly by verifying his prior track record, by indirectly finding people that have invested in his deals in the past and talking to them and asking them questions, and just doing as much homework as I could, because essentially it was investing with someone I've never met before in a property that I've never seen in person, only through Google Earth. So it was challenging, but I took a leap of faith. I took action, and I was very happy at the end. And more properties followed. So
you found somebody in the business, and then you did as much research as you could to make sure they were somebody you could trust, somebody you wanted to partner with.
Absolutely. So that was very, very important to me. Someone I could trust, and someone who had a strategy that was along the same lines as my strategy, which is basically beautify the community and make sure that this would be a place where the folks would want to live, would want to come in, and would want to bring their friends and family. That was also very, very important to me, and it's still very important to me as well these days. So
you raised capital for his deal, or a deal that he had in process or place. Is that right?
So that came a little bit later, but the deal that I just mentioned was the deal where I invested as an equity partner.
Okay.
And after doing several deals as an equity partner, I became a lot more interested in becoming more active in real estate. And I took a course from someone, which was a self-paced course, to learn about syndications. And after learning that course, I started networking very, very heavily, virtually and in person, by going to different events, going to local meetups, and talking to people on Bigger Pockets and outside of Bigger Pockets. And through networking, I found my first partners for the first deals. We discussed the essentials, the strategy behind this deal, agreed on the terms, and then just off we went. I mean, I did the research as extensive as I did when I was an equity partner, and I decided that this was a good deal. I invested in the deal myself, and I try to do that, by the way, every single time when I bring the deals to my investors. As long as I have the funds available, I always invest in all the deals that I offer to my investors. That's my one of my number one criteria and requirements for the deal.
Great. So now you've done a few deals. You've been, you've gained quite a bit of experience, right? You've been involved in numerous transactions now. You were investing yourself, and now you're raising capital. So tell us about, when you first started raising capital for these deals. How, I assume the meetups and things like that, are helping you with that. And but tell us, why, how did you know to start the meetups? Why, how's that going? I guess give us some background on helping the listener raise capital like you're doing.
Sure, absolutely. So the idea to start meetups basically came out of the questions that I started gaining on bigger pockets as I gained more credibility, and I was able to answer a lot of people's questions. I figured very similar questions would be coming out from people that are local to me, and because I'm in northern New Jersey, very close to the city, I thought it would be a good idea to start the meetups in both places, New York and New Jersey. So I started my meetups, and I've been trying different formats. For instance, in New York, I started out with pure networking meetup, where people would come in and just rotate and network with one another and kind of answer each other questions, help each other out. I was able to connect people with like the right folks that they were looking for. Like someone was looking for a realtor, I would connect them to a realtor or a contractor or a wholesaler and stuff like that. Where in New Jersey, the meetups were more concentrated on educations. I mean, we still have the networking component, but after the networking always comes the educational piece, where I bring a presenter in, and the presenters always cover a topic that's in demand by my audience. Obviously, nothing can be one size fits all, but what I do after each and every meetup, I ask people to provide potential topics that they would like to see at the future meetups. And based on those topics, I bring the presenters in. There's never any solicitation. It's always about education and helping one another. And so all of the topics are around how to generate passive income, how to invest in real estate. Mind you, my concentration is syndications, but the topics that we offer are more broad than that. We've covered, we've had brokers over, I had people that cover syndications, I had people that cover wholesaling, so it's everything that's related to real estate. And to answer your second question about the capital raising component, as I was networking with people, I was asking people as to what their pain points are and what are the areas where I could bring help to their business. And a lot of them had mentioned that if they could pass away the capital raising piece, it would free up a lot of their time, and they would be able to concentrate on other things such as deal finding, investigating the deal, or doing everything else around the deal, but just not having to handle the investors or do the capital raise. And I figured that I should give it a try again. I already had the meetups at that time. I've been networking virtually and in person with a lot of people. And besides being an accredited investor myself, I'm surrounded by a lot of other folks that are also either accredited or getting close to that point of being accredited. So I figured I should take action and start helping out with capital raises. And again, as it always the case, it's hard to do your first one, but after the first one, there's always the second and the third, and they just come in naturally these days. And people start reaching out all the time, which is great. And I always like helping people, so it's been great.
So from being a passive investor also and accredited and you mentioned, you all were scared of Wall Street, and you can probably relate to investors, a lot, in that area. Can you explain kind of what, why were you afraid of Wall Street, and what did real estate have that Wall Street didn't?
Absolutely. So with Wall Street, I believe there is no control of your investment. Let's take an example of a Starbucks stock. A lot of folks like to drink Starbucks coffee, including myself. And even if I drink that coffee 5 times a day, it has no direct correlation to the Starbucks stock. I mean, even if I start drinking coffee every single hour, the Starbucks stock will not going to jump up to its highest point. And that's unfortunate, and that obviously gives investors no control over the stock market. I mean, look what's been happening to the stock market last week. It's absolutely incredible, and we have no control over it, and there is no way for us to know how to manage that. Where with real estate, it's a lot more manageable. The property is in the hands of experienced deal sponsor or a team of sponsors that's been in the real estate for a very long time. They know what they're doing. So unless there is some sort of natural disaster that comes into play, which do happen from time to time, like Hurricane Sandy happened in the past, everything else is pretty much controllable and manageable. Yes, apartment buildings have vacancies, and so storage units and mobile home parks, but those vacancies can be filled. You can renovate units, you can bring new tenants, you can advertise. There are ways to reposition your property, bring it to a perfect state, and then start bringing new tenants in. And that gives the property owners, the deal sponsors, control over the property. They know how to do it. They enter the market that they believe they can work in, and they can bring the investment value up, and in this way give the investors dividends. In other words, give them returns on their investment, which gives a lot of control to the sponsors and indirectly to the investors, because the investors enter into the opportunity with the sponsors that they already know or learned. Either they learned about the sponsors through me or through someone else, but they know directly who is going to be managing the investment for them, which I believe is phenomenal and gives a lot of credibility to the real estate investment in general, along with many other benefits. I mean, I can speak for hours about the benefits, but I know we don't have that much time.
So we read about, that you help a select group of people build their wealth passively. Tell us a little about that, or elaborate on that.
Absolutely. So people, initially, I was reaching out just like everyone else to my friends and family, telling about what I do and how I do it. But over time, I started getting feedback and having people reach out to me and ask me, hey, how do you do it? How can I get involved? And what is syndication? How does it work? And now it's all about helping those people get acclimated, educate them on how the syndication process works, and more or less do the hand-holding for the initial few syndications. And after that, pretty much they understand the process, and all it takes is explaining them what each particular investment entail, what kind of pros and cons each of them has, and help them select the investments that work best in their case. Because again, I strongly recommend to folks to diversify, and diversification doesn't mean to just diversify out of Wall Street. You can diversify even within the syndication world. Number one, you can invest in multiple asset classes. Number two, you can invest in different markets. Number three, you can invest across multiple deal sponsors. So there are tons of ways to diversify even within syndication world. And by no means I'm telling people to completely get out of the stock market. No, you can stay in the stock market and continue investing in stocks, ETFs, bonds, mutual funds, and whatever else. But my main point is always diversify. Keep a fraction of your investments in the stock market, but also invest in real estate and invest in other things outside of real estate as well. I mean, there are tons of ways to invest.
So I like how you really focus on educating your investors and educating others, in the syndication business. So you talked about you first reached out to family, friends, and, just really a lot of just letting people know what you're doing. Right. But then they have questions. Well, what does this mean? And, you say this word syndication and people are like, well, what is that? So help us educate others. What should that conversation look like? Or, how do I explain that to maybe someone who's, they've never had any rental property, but they'd like to own real estate, but they don't, so how do we explain the syndication business to a potential investor?
Sure. So syndication entails pulling people money together to buy a real estate. And when we're buying large commercial real estate, obviously we have to pay for the down payment, we have to pay for the renovation costs, and we have to pay closing costs. And by pulling the people money together, we're able to pull all those money together and get the financing in addition to that. For folks that are potentially interested in syndication, I normally try to ask them a few questions and ask, are you someone who has the funds but not the desire to be an active landlord? Or are you someone who has the means but don't want to be involved to be the landlord? If they answer yes to these questions, that means that they have interest to be passive investors. And then I even make a parallel comparison with the stock market. Just like you buy stocks or bonds on the stock market, in a similar way, you can invest in a syndication by basically reviewing the investment summary of a particular investment, asking a few questions, and deciding whether this investment for you or not. Once you invest in a syndication, at that point your work is over. You just sit back, relax, and enjoy the rewards of syndications in the form of periodic dividends and then potential capital events when you can maybe get the money back during the cash out refinance, or at the end of the life cycle when the property is sold and you receive the fraction of a gain being a partial property owner.
So what does that mean? Receive a partial gain or the gain? What does that mean? If we're talking to an investor, how do we explain that?
Again, I can make a parallel by comparing it to selling a single family home. Someone bought a single family house that needed some work. You renovate that house, you put the tenant in that house, you wait for at least a year and 1 day because you don't want to incur a short-term capital gain. And I'm sorry, the former tax accountant speaking in me. And you sell the house as long as it's been over a year and 1 day for a profit. When you sell in a single family house, you get the full profit to sell. But when you're a partner in a syndication, your return is based on your initial investment. That's why your gain will be based on your initial ownership investment as well, and you will receive the gain based on that initial ownership percentage also.
Nice. Alina, what's the number one thing that's contributed to your success in the syndication business?
I would say dedication and desire to never give up, always move forward. And also that's one thing, but I also want to mention something else. Real estate is a team sport. So unless I had the partners and people that surround me that I could reach out to and ask questions, I don't think I would be able to be where I am at today. At the beginning, especially, I had tons of questions, a lot of things to uncover and determine for myself. So I've been reaching out to a lot of folks that I met through Bigger Pockets or through other social media forums. And I have to say, majority of folks are willing and able to help, and we're very, very open about helping others, and I'm very grateful for that, and I'm all about returning favors. So that's why I'm trying to spend as much time as possible in Bigger Pockets and just give back to community, answer as many questions as I can. Nowadays I get a lot of questions through either the forums or people reach out by private messaging me, and I try to answer all of the questions that I can, and if I can't, I would direct them to someone else who can help them out, because some folks are interested in wholesaling or flipping or doing note investing. And, by being around real estate for many years now, I know folks that are experts in one area or the other. So I try to connect the new investors with the people that can help them down the road.
What's been the hardest part of the syndication process, in your business, just learning it and getting up to where you're at now? What's been the hardest part?
The hardest part at the beginning of the real estate process was selecting that one thing, selecting that one niche. And for me, it was selecting syndication. And I read the book, which is called One Thing by Gary Keller and Jay Papasan, and since I've recommended that book to a lot of other people, it's very, very difficult to select that niche at the beginning. When you read these forums and you read about people's successes and failures and different interests and different niches within real estate, it's really hard to find that one area to concentrate on, and it was difficult for me to select the syndication in the first place. But once I narrowed it down, I set my mind on syndications. I just moved forward and never looked back, and just sticking to the course and concentrating on syndications only. And in general, in terms of syndications, if you ask what's the hardest part about syndications, just like any business, syndications has its ups and downs, and every investment has its ups and downs. And at the beginning, when someone looks at the investment, like if I were to speak from, let's say, an equity partner, from a passive investor point of view, when the person looks at the investment for the first time, or even for the first few times, they're not sure what to look for. I always tell them, read the full executive summary from the beginning to an end. Try to understand what the executive summary entails. Try to make the comparison between this investment and what you know, and try to connect the dots. Don't just look at one number in silo. Let's say it's cash on IRR. Try to look at them in a combination. And if certain things don't make sense, always ask questions. I always tell my investors, reach out, ask questions. I'll be more than happy to help out and answer any questions they have, and help them out as much as possible. But I would say until you get the answer, until you have full understanding as to what you're doing, don't take action. Only start investing when you fully understand what you're doing and what you're investing in. I'm sorry if it wasn't as short as you wanted.
No, it's good. It's really good. Great content.
I tried to give as much details as possible.
Yeah. Thank you so much, Alina. You've been a great guest. Tell the listeners how they can learn more about you and your business, and maybe get in contact with you.
Sure. I'm reachable by all means. They can reach me through email, alina@samofinancial.com, or phone or text 201-281-7430, or my website, which is samofinancial.com. Always reachable.
Thank you so much. We'll have that in the show notes, and I hope the listeners will reach out to Alina and connect with her. And I hope you'll connect on the Facebook group so you can communicate with her and we can all learn this business together. And we will talk to you all tomorrow.
Sounds great. Thank you, Whitney.
Thank you for listening to the Real Estate Syndication Show, brought to you by Life Bridge Capital. Life Bridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. Life Bridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.